how do you value goodwill? Suppose a firm which has been in existence for the past 15 years is selling itself, including goodwill. The assets, net assets is only worth 10 lakhs, but the goodwill is 15 lakhs. So total 25 lakhs they get consideration, out of which assets can be only 10 lakhs. Remaining 15 is goodwill. So goodwill is a capital asset. But what is the cost of that goodwill? How do you arrive at the cost of such goodwill, which is built up over the period? How do you determine the cost? Any idea? The cost of the film is only 1 crore. Simply because Rajinikanth appears in the one scene, it is being sold for 5 crores. And how? There is goodwill. Apparently, there is some goodwill. How do you determine the cost of that goodwill? You know what is goodwill, right? It is built up over the period. All those things you would have studied in 12th standard, and then in CPT, and then in your accounts class. So I don't go into how goodwill is being arrived at. No. It is a very complex process of determining the cost of such goodwill. You cannot. Everybody will say, no, we have built, our sweat is there, our sweat is goodwill. So there is no capital gain in respect of such goodwill, is the argument put forth by the people who want to not get taxed. There was an amendment which stated very clearly, in the case of a self-generated goodwill, the cost of acquisition shall be nil. Suppose a firm whose net assets is only 10 lakhs is selling itself for 25 lakhs, then the remaining 15 lakhs is goodwill, and the cost of such goodwill is 0. No arguments, period. Suppose if you purchase goodwill, person who purchases that goodwill, then for him the cost of acquisition is whatever he has paid for, like 15. If A is selling the firm to B, then the amount paid by B to acquire such goodwill will be cost. Whereas A, who is self-generated, in that case, the cost will be nil, period. No other argument. The cost of self-generated asset, especially goodwill, is nil, 0. That means the entire sale consideration or net sale consideration will be treated as capital gains. The entire net sale consideration on transfer of self-generated assets like goodwill will be treated as capital gains. Now, we have also discussed about tenancy rights in the last class, remember? And then bonus shares. And earlier when we studied how to compute the cost of bonus shares, you applied for 100 shares, you got the 100 shares. Now you are given bonus shares, another 100, 1:1. You applied at 10 rupees, bonus shares are issued. Suppose you purchase 100 shares at rupees 10, 1:1 bonus. So what is the cost of bonus shares? You applied for 100 shares at 10 rupees, you got the bonus share, you got the shares, original shares. So 10 into 100, 1,000 rupees is the cost of acquisition. A year later, the company announces 1:1 bonus. Now, what is the total cost of acquisition of all the 200 shares? 1,000. Now, what is the cost of the bonus shares? Cost of original shares? 1,000. What is the cost of bonus shares? How can that be here? Cost of original share 1,000. Cost of the bonus share cannot be 1,000 because the total cost is only 1,000. One simple answer could be to average it out. Total shares 200, total cost 1,000. So cost of one share will be 50 or 5 rupees. Sorry. That is averaging out. This is quite easy when you have only one bonus issue. Next year, another bonus issue, 1:1. Now, what is the total number of shares you have? 400. 200 shares, 1:1, another 200. 400 shares, 1,000. Now, what is the total cost? 1,000. Total number of shares, 400. Cost per share is 2.5, averaging it out. But what is the cost of the bonus shares? When you're averaging out, the cost of every share will be same. No need to distinguish between original share and bonus share. But this led to a lot of complication, because when people sold only part of the shares, then the capital gains became all the more complicated. When practically it is complication, look at the plight of the students in the examination hall. You can't even ask doubts. அங்கதான் நம்மளுக்கு டவுட்டே வரும். எல்லா டவுட்டும் அங்கதான் வரும். அது வரைக்கும் இதே நம்மளுக்கு முன்னாடியே சொன்னல. So by amendment, they said yes, cost of bonus shares will be always treated as nil. To avoid all these confusions, cost of bonus shares will be nil, zero, period. So when you sell the bonus shares, the entire sale consideration will be treated as capital gains.